When silver crosses certain psychological thresholds, $30, $35, $40, $40 per ounce,
The metal hasn't changed.
happens.
Its industrial
The metal
utility
hasn't
remains
changed.
identical.
Its industrial
chemical properties are
utility
constant.
remains identical.
But the narrative
Its
around
chemical
it
properties are
transforms
constant.
This
But the
is where
narrative
Charlie
around
Munger
it
would
transforms
pause and ask his
completely.
signature question.
This is where Charlie
What are
Munger
the
would
incentives
pause
at
and
play
ask
here?
his signature question.
The answer
What are
reveals
the
everything
incentives
about
at
why
play
intelligent
here?
people start
The
making
answer
unintelligent
reveals
decisions
everything about why
precisely
intelligent
when
people
precious
start
metals
making
enter bull
unintelligent
markets.
decisions
Financial media
precisely
needs
when
content.
precious metals
Silver
enter
rising
bull
40%
markets.
in 3 months
Financial
generates
media
headlines,
needs
clicks,
content.
and advertising revenue.
Silver rising
Dealers selling
40%
physical
in
metals
3 months
see commission
generates
opportunities.
headlines, clicks,
YouTube creators
and
find
advertising
engagement
revenue.
metrics soaring when they discuss
Dealers selling
silver to the
physical
moon
metals
scenarios.
see commission opportunities.
Online communities reinforce
YouTube
each other's
creators find
excitement,
engagement
creating echo
metrics
chambers of
soaring when
confirmation
they
bias.
discuss silver to the
None of
moon
these incentives
scenarios.
align with your financial
Online
well-being.
communities
Munger
reinforce
spent
each other's
decades studying
excitement,
how incentives
creating
drive
echo
human
chambers
behavior,
of confirmation
often in perverse
bias.
directions.
None
He
of these
observed that
incentives
people
align
don't
with
just
your
respond
financial
to
well-being.
financial incentives.
Munger
They
spent
become
decades
psychologically
studying how
captured by them
incentives
without
drive
realizing
human
it.
behavior, often
The
in
seller of
perverse
silver
directions.
doesn't wake up thinking,
He
"I'm
observed
going to
that
manipulate
people don't just
today."
respond to
They
financial
genuinely believe the
incentives.
narrative they're
They
selling
become
because their
psychologically
livelihood
captured by
depends on
them
believing
without
it.
realizing it.
This is the
The
first
seller
layer
of
the
silver
problem.
doesn't wake up
When
thinking,
metals rise,
"I'm going to
an entire
manipulate people
ecosystem
today."
financially
They
benefits from
genuinely
your emotional
believe the
engagement,
narrative they're
not your
selling
rational
because their
decision-making.
livelihood
The
depends on
second layer
believing
involves
it.
what
This is
psychologists
the first
call
layer
the
of the problem.
extrapolation bias.
When metals
Humans
rise,
are pattern
an
recognition
entire
machines which
ecosystem
served us well on
financially
the savannah,
benefits
but
from your
betrays us
emotional
in markets.
engagement,
When
not
silver
your
rises
rational
from
decision-making.
$20 to $35
The
in
second
4
layer
months,
involves
our
what
brain automatically
psychologists
projects
call
that
the
trajectory
extrapolation
forward.
bias.
If it went up
Humans
75%
are
in
pattern
4
recognition
months, why not
machines,
another 75%
which served us well
in
on the
next 4
savannah
months?
but betrays us
The
in
mind
markets.
creates a straight line from
When
past
silver
to
rises
future,
from $20 to
ignoring that markets move
$35 in 4
cycles,
months,
not
our
trajectories.
brain
Munger
automatically
called this
projects that
the natural
trajectory
human
forward.
tendency to
If
extrapolate.
it went up 75%
That's why
in
people
4
buy
months,
stocks at market
why
tops
not
and sell at
another
bottoms.
75%
They
in the
mistake
next 4
recent price
months?
action for predictive
The mind
information.
creates a straight
when
line
in
from
reality,
past to future,
price action
ignoring
is
that markets
descriptive of
move
what
in
has happened,
cycles,
not
not
prescriptive of what will
trajectories.
happen.
Munger
The third
called this
mechanism
the
is herd
natural
behavior,
human
but not in the
tendency
simple
to
way people usually
extrapolate.
describe it.
It's why people
You're
buy
not
stocks
blindly
at
following
market
the crowd.
tops and sell at
You're
bottoms.
experiencing the profound
They mistake
psychological
recent
comfort
price
that comes
action
from
for
consensus.
predictive information.
When silver is
when
rising
in reality,
and everyone
price
around
action
you is buying,
descriptive of what
disagreeing
has
with that
happened,
consensus
not
feels
prescriptive
cognitively
of what
painful.
will happen.
Your brain
The third
interprets
mechanism is
contrarian
herd
thinking
behavior,
as social
but not
danger.
in the simple way
Munger
people
understood this
usually
deeply.
describe it.
He often quoted
You're not
Demosthenes.
blindly following the
Nothing
crowd.
is easier
You're
than
experiencing the
self-deceit.
profound
For what each
psychological
man
comfort
wishes,
that comes
that
from
he also believes
consensus.
to be true.
When silver is rising and everyone around you
wish
is
to be
buying,
part of the winning trade.
disagreeing with that
So you become
consensus feels
susceptible to
cognitively
believing whatever
painful.
narrative justifies
Your
that
brain
position.
interprets contrarian
The
thinking
fourth
as
element
social
is
danger.
the confusion between
Munger
protection
understood
and
this
speculation,
deeply.
between hedging
He often
and gambling.
quoted Demosthenes,
Investors tell themselves
"Nothing
they're
is
buying
easier than
silver as
self-deceit."
insurance,
For what
or
each
protection
man
against
wishes
currency
that he
debasement,
also believes to
which
be
sounds
true.
rational and prudent.
When silver is
But Munger would
rising,
immediately
you
spot
wish
the
to be
sleight
part
of
of the
hand in
winning
this
trade,
reasoning.
so you become
Insurance
susceptible to
protects you
believing
from
whatever
downside
narrative
risk. You
justifies
pay
that
premiums to
position.
State Farm,
The
not
fourth
hoping your
element
house
is the
burns down so
confusion
you can
between
collect.
protection
But
and
when people buy
speculation,
silver at
between
$35,
hedging and
hoping it goes to
gambling.
$50,
Investors
they're
tell
not
themselves
buying
they're buying
insurance.
silver
They're
as
speculating on price
insurance or
appreciation.
protection against
They've
currency
dressed up a
debasement,
speculative
which
bet
sounds
in
rational
respectable
and
clothing
prudent.
of risk management.
But Munger
This
would
linguistic
immediately
camouflage
spot the
allows
sleight of
investors
hand
to
in this
bypass
reasoning.
their own risk controls.
Insurance protects you
They
from
wouldn't put
downside
30%
risk.
of their portfolio into
You
a
pay
penny stock,
premiums to State
but
Farm
they'll
not
put
hoping your
30% into
house
silver
burns
while
down so
calling
you
it
can
protection,
collect.
which their
But when
brain
people
registers
buy
differently
silver at
despite
$35
identical
hoping it
speculative
goes to
risk.
$50,
The final
they're not
dynamic
buying
is the
insurance,
false
they're
sense of
speculating
understanding
on
that
price
rising prices
appreciation.
create.
They've dressed
When
up
you
a
buy something
speculative
and it
bet in the
immediately goes
respectable
up
clothing of
20%,
risk management.
your brain releases
This
dopamine and
linguistic
creates a
camouflage
narrative.
allows
I
investors to
understood this
bypass
opportunity.
their own risk
The
controls.
price movement becomes retroactive
They wouldn't put
validation
30% of
your
their
analytical
portfolio
process,
into a penny
even
stock,
if your actual process
but they'll put
was emotional
30%
reaction
into
to
silver
momentum.
while calling
Munger
it
observed this
protection,
pattern across
which their
decades of bubbles.
brain registers
People
differently
confuse
despite
getting
identical
lucky with being
speculative
smart.
risk.
The market's
The final
agreement with your
dynamic is
position
the false
feels
sense of
like
understanding that
confirmation of
rising
deep
prices
understanding,
create.
when often
When you buy
it just
something
means you
and
caught
it
a wave of
immediately goes
sentiment.
up 20%,
Here's what makes
your
this
brain
particularly
releases
dangerous.
dopamine and creates
All
a
these
narrative,
psychological
I understood
mechanisms
this opportunity.
activate more strongly
The price
during
movement
genuine
becomes
bull markets in real
retroactive
assets.
validation of your
When
analytical
silver is
process,
rising for
even
fundamental
if your
reasons,
actual process was
monetary
emotional
instability,
reaction to momentum.
genuine supply constraints,
Munger
real
observed this
industrial
pattern
demand,
across
the
decades of
emotional
bubbles.
narrative and the fundamental
People confuse
narrative
getting
align.
lucky with being
This creates
smart.
the perfect storm of
The
conviction.
market's agreement
You're
with
not
your
wrong
position
that silver
feels
has
like
value.
confirmation
You're not
of
wrong that
deep
monetary policy
understanding,
creates
when
risk.
often it
You're
just
not wrong
means
that
you
precious
caught a
metals can
wave of
preserve
sentiment.
purchasing power.
Here
But being
asks what
directionally
makes
correct
this
about the
particularly
asset
dangerous.
doesn't mean you're thinking
All
correctly
these
about the
psychological
investment.
mechanisms
This
activate more
distinction
strongly during
between a good
genuine
asset
bull
and a
markets
good
in real
investment
assets.
is where the
When
fallacy
silver
lives.
is rising for
If you
fundamental
appreciate this
reasons,
kind of rational
actual
analysis about
monetary
investing,
instability,
subscribe to the
genuine
channel.
supply
The
constraints,
greatest fallacy investors
real
commit
industrial
during precious
demand,
metals bull runs
the
is
emotional
this.
narrative and the
They mistake a
fundamental
compelling
narrative
story
align.
for a margin of safety.
This creates the perfect storm
Charlie
of
Munger
conviction.
built his fortune on
You're
a
not
simple
wrong that
principle
silver
that
has
most
value.
investors investors misunderstand.
You're not wrong that monetary
Price is what you
policy
pay.
creates risk.
Value is what you get.
You're not wrong that
But
precious
during
metals
silver
can
bull
preserve
markets,
purchasing
investors
power.
reverse this equation.
But being
They
directionally
look at
correct
rising
about the
prices
asset
and conclude
doesn't mean
rising
you're
value.
thinking correctly
They
about the
confuse market
investment.
sentiment for fundamental
This
analysis.
distinction between a
Let's
good
apply
asset
Munger's
and a
most
good
powerful
investment
mental model.
is where the fallacy
Inversion.
lies.
Instead of asking,
If you
why
appreciate
will
this kind of
silver go
rational
higher?
analysis
Ask,
about investing,
how could I lose
subscribe
money
to the
even
channel.
if silver continues rising?
The greatest fallacy
The answers
investors
emerge
commit during
immediately.
precious
You
metals
could buy
bull
at a
runs
local
is
top
this.
before a
They
40%
mistake a
correction
compelling
within
story
the
for
broader
a margin
uptrend.
of safety.
You could incur storage,
Charlie Munger
insurance,
built his
and
fortune
transaction
on a
costs
simple
that
principle
exceed your
that most
gains.
investors
You could
misunderstand.
sacrifice the
Price is
opportunity
what you
cost
pay.
of compound interest
Value
in
is what you
productive
get.
assets.
But
You could
during
hold through
silver
the
bull
peak and
markets,
write it back
investors
down,
reverse this
psychologically
equation.
unable to sell what
They
you
look
bought
at
for
rising
long-term
prices and
protection.
conclude rising
You could
value.
buy at premiums
They
15,
confuse market
20%
sentiment for
above spot
fundamental
price,
analysis.
ensuring you need
Let's
substantial
apply Munger's
appreciation
most
just to break
powerful
even.
mental model,
All of these
inversion.
scenarios happen regularly,
Instead of asking,
even during
why
genuine
will
bull
silver
markets in
go
precious
higher?
metals.
Ask,
The metal goes
how
up,
could I lose
but the
money
investor still
even if
loses.
silver continues rising?
Why?
The
Because
answers
they
emerge
confused a
immediately.
correct macro narrative
You could
with
buy at a
intelligent
local
position
top
sizing,
before a
timing, and risk
40%
management.
correction within the broader
Munger
uptrend.
emphasized that avoiding
You could
stupidity
incur
is more important than
storage,
seeking
insurance,
brilliance.
and
During
transaction
silver bull
costs
runs,
that exceed your
stupidity
gains.
takes a specific form.
You could sacrifice the
Abandoning
opportunity
basic
cost of
investment discipline
compound
because
interest
the
in
narrative
productive
feels
assets.
protective rather than
You
speculative.
could hold through the peak and write it
Consider
back
the
down,
concept of
psychologically
margin of
unable
safety,
to sell what
which
you
Munger
bought
learned from
as
Benjamin
long-term
Graham.
protection.
Margin of
You
safety
could buy
means
at
buying
premiums
something for
15 to
significantly
20%
less than
above
its
spot
intrinsic
price,
value,
ensuring you need
creating a
substantial
cushion against
appreciation
error
just
or
to
bad
break
luck.
even.
It's the
All
difference
of these
between
scenarios
buying a
happen
$100
regularly,
bill for
even during
$60
genuine
versus
bull
buying it for
markets in precious
$95.
metals.
Now ask
The
yourself,
metal goes up, but the
when silver
investor
has
still
already risen
loses.
50,
Why?
75%,
Because they
where's your
confused
margin
a
of
correct
safety?
macro narrative
Investors
with
respond,
intelligent position
silver could
sizing,
go to
timing,
100.
and risk management.
This reveals the fallacy perfectly.
Munger emphasized that
They've shifted
avoiding
from buying
stupidity
value
is
to
more
buying
important
momentum.
than seeking
They've
brilliance.
shifted from margin of safety
During
to price
silver
prediction.
bull runs,
They've
stupidity
shifted from
takes a
investment to
specific
speculation
form,
without
abandoning
acknowledging the
basic
shift.
investment
Munger
discipline
would
because
point
the
out
narrative
that
feels
even if silver
protective
reaches
rather than
$100,
speculative.
that does
Consider
not
the concept of
retroactively
margin of
create a
safety,
margin of
which
safety
Munger
of
learned from Benjamin
$35.
Graham.
It just means
Margin of
you
safety
got
means
lucky
buying
on
something for
speculation.
significantly
And
less
building
than
wealth
its
on the
intrinsic
assumption of getting
value,
lucky is
creating
not a
a
process
cushion
you can
against
repeat
error
over a
or bad
lifetime.
luck.
The psychological
It's the
trap
difference between
deepens
buying a
because precious metals
$100 bill
offer
for
what Munger called a
$60
pernicious
versus
form of
buying it for
rationalization.
$95.
The narrative
Now ask
around
yourself,
metals,
when
monetary
silver has
debasement,
already
government
risen 50 to
mismanagement, fiat currency
75%,
risk,
where's your margin
is
of safety?
intellectually correct.
Investors
These are real
respond,
phenomena. This
but
makes
silver
the emotional
could go to
decision feel like a rational
$100.
one. But Munger
This
taught
reveals the
that
fallacy
correct analysis
perfectly.
of a problem
They've
doesn't
shifted from
automatically
buying
mean your
value to
solution is
buying
correct.
momentum.
Yes,
They've shifted from
fiat
margin
currency
of
faces
safety to
long-term
price
purchasing
prediction.
power erosion.
They've shifted
Yes,
from investment to
governments run
speculation
unsustainable
without
debts.
acknowledging the
Yes,
shift.
precious metals
Munger
maintain
would point
value
out that
across
even if
centuries.
silver reaches
None of that
$100,
answers the question.
that
Does buying
doesn't
silver at
retroactively
current
create a
prices
margin
and
of
current
safety
quantities
at
with my current
$35.
capital
It
the
just
optimal
means you got
decision?
lucky on a speculation.
Investors skip
And
this
building
question
wealth
because
on the
the macro
assumption of getting
narrative
lucky
feels like
is not a
sufficient
process you can
justification.
repeat over a
They
lifetime.
confuse being right about
The psychological
the problem
trap
with being right about the
deepens because
solution.
precious metals
Munger
offer
spent
what
his
Munger
life
called
watching smart
a
people make
pernicious
this
form of
exact mistake across
rationalization.
different assets
The
in
narrative
different
around
eras.
metals monetary
Let's
debasement,
examine opportunity
government
cost,
mismanagement,
which Munger
fiat
considered
currency
one of the
risk
most
is intellectually
underappreciated
correct.
concepts in investing.
These are real
Every
phenomena.
dollar in silver is
This
a
makes
dollar
the
not
emotional
compounding
decision
elsewhere.
feel like a
If you
rational
put
one.
$50,000 into
But
silver
Munger
at
taught that correct
$35
analysis
per
of a
ounce,
problem doesn't
you're not just
automatically
betting
mean
on
your
silver
solution
rising.
is correct.
You are betting that silver
Yes,
will outperform
fiat
every
currency
alternative
faces
use of that
long-term
capital over your
purchasing
holding
power
period.
erosion.
During bull markets,
Yes,
investors
governments
don't think
run
in these terms.
unsustainable
They think
debts.
silver is
Yes,
going up.
precious metals maintain value
They
across
do think,
centuries.
will
None
silver
of
at
that answers the question.
$35
Is
outperform
buying
a
silver at
diversified
current
portfolio
prices
of
in
productive
current
businesses over
quantities
the next
with my
3 to
current
5 years?
capital the optimal decision?
That's a much harder
Investors
question
skip
with a
this
much less
question
obvious
because the
answer.
macro narrative
Munger's
feels like
partner, Warren
sufficient
Buffett, often
justification.
distinguished between
They
productive
confuse
and
being right about the
non-productive
problem
assets.
with being right
Productive
about the
assets,
solution.
Businesses, farms,
Munger
real
spent
estate,
his life
generate
watching smart
value through
people
their
make
use.
this exact mistake
Non-productive
across
assets,
different
gold,
assets
silver,
and different
collectibles,
eras.
only
Let's
produce
examine
returns if someone
opportunity
pays you more
cost,
for them later.
which Munger
This doesn't
considered
make
one of the
precious
most
metals worthless.
underappreciated
It makes them
concepts in
fundamentally different
investing.
instruments requiring
Every dollar in
different
silver is a
analytical
dollar not
frameworks.
compounding
But
elsewhere.
during bull markets,
If you put
investors analyze
$50,000
silver
into
as if
silver
it were a
at
productive
$35
asset
per
generating
ounce,
intrinsic value,
you re not
when
just
it's
betting on
actually a
silver
bet
rising.
on future
You
buyers'
re-betting that
psychology
silver
and
will
monetary
outperform
conditions.
every
The most
alternative
pernicious
use of that
aspect of this
capital
fallacy
over your
is
holding
that good
period.
assets purchased for
During
wrong
bull
reasons
markets,
become bad
investors
investments.
don't think in these terms.
Silver might be an excellent
They think
long-term store of
silver
value.
is going up, I
If
should
you're
own
buying
some.
it during euphoria,
They do and think,
sizing it
will
improperly,
silver at
paying high
$35
premiums, and holding
outperform a
with an emotionally
diversified
charged
portfolio
narrative,
of
you've
productive
transformed a
businesses over
potentially
the
good
next
asset
3
into
to
a
5
bad
years?
investment decision.
That's a much harder
Munger
question
observed
with
that
a much less
investment results
obvious
depend
answer.
less on what you buy
Munger's
than on
partner
why you
Warren
buy it
Buffett
and how you
often
manage it.
distinguished between
Two investors
productive
can
and
buy
non-productive
identical
assets.
assets and have opposite outcomes
Productive
based on their
assets,
process.
businesses,
When you buy silver
farms,
because
real
everyone's
estate
talking about
generate
it,
value
because
through
the
their
price
use.
is rising, because you fear
Non-productive
missing
assets,
out,
gold,
because the narrative
silver,
feels compelling,
collectibles only
you're
produce
not investing.
returns if someone
You're
pays you more for
reacting.
them later.
And reaction action-based
This doesn't make
decisions,
precious metals
even in good
worthless.
assets,
It
produce
makes them
poor long-term
fundamentally
results.
different instruments
If this is
requiring
changing how you
different
think about
analytical
silver,
frameworks.
leave a comment below.
But during bull
Charlie Munger
markets,
wouldn't reject
investors
silver.
analyze
He'd reject
silver
sloppy
as if it
thinking
were a
about silver.
productive asset
If you force
generating
Munger to
intrinsic
analyze
value,
precious metals,
when it's
he'd
actually a
start with
bet on
first
future
principles.
buyers' psychology
What role,
and
if
monetary
any,
conditions.
should non-productive assets
The
play
most
in a
pernicious
rational
aspect
portfolio?
of this fallacy
What percentage
is that good
allocation
assets
maintains
purchased for
optionality
wrong
without
reasons
sacrificing
become bad
long-term
investments.
compounding?
Silver
Under what
might be an
conditions does the
excellent
equation
long-term
change?
store of value.
His framework would
But if you're
likely
buying it
separate
during
three
euphoria,
distinct concepts that
sizing it
investors
improperly,
constantly conflate.
paying high premiums,
First,
and
permanent
holding with an
portfolio
emotionally
protection.
charged narrative,
A small,
you've
permanent
transformed a
allocation to
potentially
precious
good
metals,
asset into a
5 to
bad
about
investment
10%
decision.
maximum.
Munger
Purchased without regard
observed
to
that
price
investment
movements,
results
rebalanced
depend less
mechanically,
on what
held
you
as
buy than
catastrophe
on
insurance
why you buy
hope to
it
never
and
need.
how you manage it.
This isn't an investment.
Two
It's a
investors can
structural
buy
hedge against
identical
tail risk in monetary
assets and
systems.
have opposite
Munger
outcomes
might
based
accept
on
this
their
as reasonable,
process.
though he'd probably
When
argue
you buy
that most
silver because
individuals
everyone's talking
overestimate
about
their
it,
need
because
for
the
such
price is
protection.
rising, because
He'd point
you
out that
fear
Berkshire
missing out,
Hathaway never
because the
held
narrative
significant
feels
gold or
compelling,
silver
you're not
positions,
investing.
relying instead
You're
on
reacting.
productive assets.
And
cash
reaction-based
optionality, and
decisions,
business
even in
quality
good
to navigate
assets,
any
produce
environment.
poor long-term results.
But he wouldn't call this
If this
framework
is changing
wrong,
how you think
just
about
different from his
silver,
approach.
leave a comment
It's a
below.
defensible position if
Charlie
maintained with
Munger
discipline
wouldn't reject
and appropriate
silver.
sizing.
He'd reject sloppy
Second,
thinking about
tactical
silver.
speculation.
If you forced Munger
Buying
to
silver because
analyze
you believe
precious
current
metals,
prices
he'd
don't
start with
reflect
first
upcoming
principles.
monetary instability
What
or
role,
supply
if any,
constraints.
should
This is
non-productive
speculation,
assets play
not
in a
protection.
rational portfolio?
Munger wouldn't moralize
What
against
percentage
speculation.
allocation
He'd just
maintains
insist you call it what it
optionality
is.
without
If you're
sacrificing
speculating,
long-term
acknowledge
compounding?
it.
Under
Size
what
it
conditions
appropriately.
does the equation
Small
change?
positions.
His
Define your
framework
exit
would likely
conditions in
separate
advance.
three
Don't
distinct
confuse a
concepts that
speculative
investors
bet with a poor
constantly
holding strategy.
conflate.
Most
First,
importantly,
permanent
recognize
portfolio
that speculation
protection, a
requires
small,
different skills
permanent
than
allocation
long-term
to
investing.
precious metals.
It requires market
5 to
timing,
10%
which Munger
maximum.
considered nearly
Purchased
impossible
without
to do
regard to
consistently.
price movements.
It requires selling
Rebalanced
discipline,
mechanically.
which humans are
Held as
psychologically
catastrophe
terrible at
insurance you
executing.
hope to never
And
need.
it requires being
This
smarter
isn't
than
an
the collective
investment,
market,
it's a
which is
structural
very
hedge
high
against
bar.
tail risk in monetary systems.
Third, emotional
Munger might
reaction.
accept this as reasonable,
Buying silver because
though he'd
it's going
probably
up,
argue
because
that
you're
most
afraid of missing
individuals
out,
overestimate
because
their
the
need for
narrative
such
feels
protection.
urgent, because your social
He'd point
media
out that
feed is
Berkshire
full of
Hathaway
silver
never
content.
held significant
This is
gold
neither
or silver
protection nor
positions,
speculation.
relying
It's
instead on
emotional
productive
portfolio
assets,
management.
cash
Munger would have
optionality,
zero
and
patience
business
for this
quality
approach.
to
He'd
navigate
call
any
it what it
environment.
is, allowing
But he wouldn't
external
call this
stimuli to
framework
override
wrong,
rational
just different
decision-making.
from his approach.
This is where
It's a
most investors
defensible
operate
position
during
if
precious
maintained
metals
with
bull
discipline
runs,
and appropriate
which is why
sizing.
most investors
Second,
underperform.
tactical
The critical
speculation
insight
buying silver
is that the
because
same
you believe
asset,
current
silver at
prices don't
$35
reflect
per
upcoming
ounce,
monetary
can represent
instability or
protection,
supply constraints.
speculation, or emotional
This
reaction,
is speculation,
depending on why
not
you're buying
protection.
it and how it fits
Munger
your overall
wouldn't
strategy.
moralize against
Munger's
speculation.
approach to
He
any
just
investment
insists you
decision
call it what it
started with
is.
understanding your circle
If you're
of
speculating,
competence.
acknowledge
Do you
it.
understand precious metals
Size it
markets?
appropriately.
Do you understand
Small
the factors that
positions.
drive supply
Define
and
your
demand?
exit conditions
Do you
in
understand the
advance.
difference between
Don't
spot
confuse a
price,
speculative
futures
bet
price,
with a core holding
and physical
strategy.
premium?
Most
Do you
importantly,
understand storage,
recognize that
insurance,
speculation
liquidity,
requires
and
different
tax
skills than
implications?
long-term
If
investing.
you can't answer these
It
questions
requires
clearly,
market timing,
you're outside
which
your
Munger
circle of
considered
competence,
nearly impossible
which
to do
means
consistently.
you should either not invest in
It
the
requires
asset
selling
or invest
discipline,
so little
which
that being
humans
wrong
are
doesn't
psychologically
matter.
terrible
Most
at
investors during
executing.
silver bull runs have
And it
never
requires
studied
being
precious metals
smarter than the
markets.
collective
They've
market,
read articles,
which is a
watched
very
videos,
high bar.
absorbed narratives.
Third,
but they haven't
emotional
developed
reaction
genuine
buying
expertise.
silver because it's
Munger
going
would
up,
say,
because you're
if you
afraid
don't
of
understand
missing
it
out,
deeply, you don't
because
have
the
an edge, and
narrative
without
feels
an edge, you're
urgent,
gambling.
because your social
He'd also
media
apply his
feed
famous
is full
maxim.
of silver content.
It's not supposed to
This
be
is neither
easy.
protection
Anyone
nor
who finds it easy
speculation,
is
it's
stupid.
emotional
During
portfolio
bull
management.
markets, buying silver
Munger
feels easy.
would have zero
The price is
patience
rising,
for this
the narrative
approach.
is clear,
He'd
the
call it
conviction
what
is
it
high.
is,
This
allowing
ease should be a
external
warning
stimuli
signal,
to
not a green
override
light.
rational
Munger spent his
decision-making.
career doing the hard
This is
work
where
of
most
analysis,
investors
while others
operate during
chased
precious
easy
metals
stories.
bull runs,
He
which
bought
is why
seized
most
candies not
investors
because candy was
underperform.
exciting, but
The
because
critical
business
insight
had
is that the
durable
same
competitive
asset silver
advantages.
at $35
He invested
per
in Chinese
ounce
stocks
can represent
not
protection.
because China was the hot
Speculation
narrative,
or
but
emotional
because specific
reaction
businesses
depending
were
on
trading
why you're
below
buying it
intrinsic
and
value.
how it fits your
The
overall
pattern is
strategy.
consistent.
Munger's
Avoid seductive
approach to
narratives.
any investment
Focus on business
decision
quality
started
and
with
price.
understanding your
Maintain
circle of
discipline across
competence.
market cycles.
Do you
Apply to
understand precious metals markets?
If if you're going to
Do
hold
you
silver,
understand the
do it
factors
as
that
a
drive
small,
supply and
permanent,
demand?
emotionally neutral
Do you understand the
allocation.
difference
Don't
between
increase it
spot
during bull
price,
markets.
futures price,
Don't check
and
the
physical
price
premium?
daily. Don't
Do
confuse
you
price
understand
movements
storage,
with validation of your
insurance,
intelligence.
liquidity, and tax
And recognize the
implications?
fundamental truth
If you
Munger
can't
repeated
answer these
throughout his
questions
life.
clearly,
The
you're
best
outside
investment
your circle
opportunities
of
rarely
competence.
feel comfortable.
Which means you
And
should
comfortable
either
investment
not invest
opportunities
in the
are rarely
asset
the best.
or invest so little
When
that
silver is
being
rising and
wrong
everyone
doesn't
agrees
matter.
it's smart to own it,
Most
that's
investors
maximum
during
comfort
silver
and
bull
minimum
runs have
opportunity.
never
When
studied
silver is
precious metals
ignored and
markets.
unloved, that's maximum
They've read
discomfort and
articles,
potentially
watched
better
videos,
opportunity.
absorbed
Though
narratives.
even then,
but they
buying
haven't
a
developed
non-productive
genuine
asset with
expertise.
specific limitations.
Munger would say,
Munger's final
if you
principle
don't
applies
understand
here.
it deeply,
Avoid
you
stupidity
don't have an
before seeking
edge. And
brilliance.
without an edge,
In the
you're
context of
gambling.
precious metals,
He'd
bull
also
runs,
apply his famous
stupidity
maxim.
looks like
It's not supposed to be
allocating
easy.
large percentages of
Anyone
your
who finds it
portfolio
easy
to assets
is
you don't
stupid.
understand.
During bull
Buying
markets,
parabolic
buying
price
silver
movements,
feels
hoping
easy.
for further parabolas.
The price is rising.
Confusing
The narrative is
agreement
clear.
with margin of
The
safety.
conviction is
Abandoning
high.
diversification
This
for
ease should be a
concentrated bets.
warning signal,
Making
not a green
decisions
light.
based on fear of missing
Munger
out,
spent his
rather than
career
fundamental
doing the hard work of
analysis.
analysis while
None of
others
this
chased
requires
easy
brilliance
stories.
to avoid. It just
He bought
requires
seized
discipline,
candies not because
self-awareness,
candy was
and the intellectual
exciting,
honesty
but
to
because the
acknowledge
business
when
had
you're
durable
rationalizing
competitive
emotional decisions.
advantages.
The
He
investors who
invested in
preserve and
Chinese
grow
stocks
wealth over
not because
decades
China was
aren't
the
the
hot
ones who
narrative,
catch the big,
but because
exciting moves.
specific businesses
They're
were
the
trading
ones who
below
avoid big
intrinsic
preventable
value.
mistakes,
The
maintain
pattern is
rational allocation
consistent.
discipline,
Avoid
and
seductive
compound their
narratives,
capital and
focus
productive
on
assets
business
over
quality
very long
and
time
price,
horizons.
maintain
Silver
discipline
might go
across
higher,
market
it
cycles.
might go lower, but your
Apply to
financial future
precious
shouldn't
metals.
depend on guessing
If
correctly
you're going to
about
hold
price
silver,
movements and
do it as a
non-productive
small,
assets.
permanent,
It should
emotionally
depend on
neutral
owning pieces of
allocation.
excellent businesses,
Don't increase it
held for
during
fair
bull
prices,
markets.
allowed to
Don't check
compound
the
over
price
decades.
daily.
That's the Munger
Don't confuse
framework.
price
It's not
movements with
exciting.
validation
It doesn't
of your
generate YouTube
intelligence.
views.
And
It won't make you feel
recognize
like
the
you're gaming
fundamental
the system,
truth Munger
but it
repeated
works.
throughout his life.
And it works precisely
The
because
best
it's
investment
designed to work
opportunities
across all
rarely
market
feel
environments,
comfortable,
regardless of
and
what
comfortable
precious metals
investment
or any other
opportunities
asset
are
class
rarely the
happens to be
best.
doing. If
When
this
silver
content
is
helps you think
rising
better
and
about
everyone
investing,
agrees it's smart to own
subscribe
it,
and comment.
that's
It really
maximum
strengthens the
comfort
channel.
and minimum